Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. An interesting market week as we sit waiting for cash. I don't know when the last time we had this much anticipation waiting for some real numbers to start to surface. So we have seen a little bit coming out of Kansas this afternoon. Talk of big liquidations, higher feed costs, and not to mention a cattle on feed report that comes out this Friday. So a lot that we're going to look at on today's episode as Brad Kooima joins us. He is with Kooima and Varlick out of Sioux Center, Iowa. I like what you were saying. The technicals have finally woke up to the trade.
Well, thank you for having me on, first of all, Susan. Well, there's two styles of market analysis, right? Technicals and fundamentals. Most of us use both. Some of us probably would, feel a little more directional from, at least that's how I feel. I think that the fundamentals drive my overall view, but you have to use technicals to figure out entry and exit points. So we've been waiting for the market to technically improve enough to attract the outside buyer, to attract the algo, to attract the fund, to attract the speculator, the long speculator. And well, you've had 5 consecutive days where the front month October cattle have made new contract highs. It doesn't get any stronger than that. This is, new highs in the Dec and the Feb for the last month. It's not contract highs yet, but you can see them from here. So yes, a very improving technical picture. And, along with that, Susan, I think I'll just mention that the open interest levels, the number of participants in our market is very, very low. Second lowest it's been in the last 10 years. The last time was back coming off of that 2015-16 wreck, that we had where we had the big sell-off after the 14 rally. So, I look at that and I say, well, that I could spin that as being bullish. That means that there's a lot of, dry powder, if you would. That if they do decide to come in here, it's not like they're long already. So it's nice to see finally, some of the chart watchers liking what the market looks like too.
So how long is this big liquidation going to continue, though?
Till it starts raining.
Okay.
Great question. And I think you could probably get different answers in different regions. I think in the north, like the Dakotas, most but not all of Montana, there's some of those areas that have had a lot better moisture. Okay, not all, but when I talk to some of the folks out there, they are talking about seeing less heifers going through the barns and seeing some heifer retention, seeing a big slowdown in the cow kill. And if you look at the actual slaughter, the percentage of cows in the slaughter the last few weeks has declined. Finally, it's still a record for the year to date, but it has declined the last little while. But in the South, it's tough there. I mean, particularly Texas, Kansas through there, they've had some rain in the last 10 days. Certainly not enough to confidently say that, hey, it's safe, to assume the drought's over. What we're looking for there is enough rain to get the wheat started, and enough courage then that the wheat's healthy enough to graze it. So we're not there yet. So I would say, I hate to dodge your question, but we'll see it when there's general rainfall across the deal that, these folks are anxious to try to rebuild the herds. They'll save those heifers as soon as they think it's safe to do so.
Well, that kind of leads into the whole feed stuff concern and higher feed costs. I mean, at what point do you say, all right, we're going to have to just leave this pen empty for a couple months because it's too expensive?
Right. And for me, when you ask that question, which is a very good question, you're probably going to get a fairly average answer. I apologize, but so I'm a northern guy, right? I'm a family farmer feeder. Who raises a lot of his own feed. And that's kind of what my area would do typically. It's kind of what you do. I see our area probably being the last to cave to that, maybe, that I always feed some calves in the fall and this and that. I think that the real problem is going to be in the big corporate yards in the South. These guys are paying $1.25 to $1.50 more than I am for corn. How in the world does that possibly work? To recruit a whole bunch of investors to throw cattle in there and think that that's going to work great. I don't see it. To me, that's where the shortfall in the placements are going to come, in my estimation anyway. They do not have the access to what usually is some cheaper feed, and that's that distiller byproduct, right? we have an ability to chop some of this drought-stressed corn so we can at least make some feed out of it. I don't know. You make a great question. There is the whole issue, though, that the guys in the South get more than us for the cattle, which sucks, even though their quality is much, much less than ours. So I suppose I'd have to balance that into your answer.
You told me earlier that the market was waiting for some sort of proof of a stronger market, and it is here. Just is it as strong as what we want it to be?
As an old futures trader, I've been kind of frustrated with this. Well, let's see if the cash is all right. And then if it is, then we'll rally futures, right? Yeah, that seems to
Right.
have been the mantra. We used to trade futures with the idea that it's futures. Get it? We're guessing what's going to happen in the future. So the futures used to anticipate these kind of moves, and I suppose one could say the future structure is premium. So we are expecting things to get better. We're expecting the numbers to tighten. But to get these bursts like we've had the last 2 days, it seemed like they've required that first the cash has to step up, which it has. We came in Monday morning with the report that there was some light trade at 152 in Nebraska late Friday afternoon. That didn't get reported. They do that on purpose. Then we had the 150 trade here yesterday, and there's a little more 150 trade in the north today. And then the 148 trade that happened here just a few minutes before you and I started to visit it a little bit to a major in Kansas. So that's 2 to 3 higher. And I think that was part of the support today with the futures thinking, well, I guess the cash is okay. So it is safe to jump back in the water.
Finally, we have a cattle on feed report that comes out on Friday. What are some of your preliminary thoughts?
These cattle and feed reports lately have been a puzzle a little, except not really. The placement number is where everybody's been hung up on. We've had relentless big placements. Last month it was about the same. Okay. But before that, we had, I think, 5 or 6 in a row, big placements. And almost without fail, it was placements of light cattle, placements of cattle that got placed because of drought conditions, no pasture to graze out, no wheat to graze out. So, maybe not changing the overall numbers of cattle, but changing the timing of them. Well, I wonder if we don't, maybe this is my opinion, and only mine, but I wonder if we finally don't run the dog to the end of the chain. The trade guess is somewhere around 96% for placements. I know people in Texas that think it's down 10. I know people in the Texas, Kansas area that think it's down more than that even. Okay. At least that's what their stuff is showing. So if we come in here with a bit of a surprise, maybe and say, hey, what if the placements are 90 and catch, the people off guard a little bit, that would be fun, of course. Marketing number guessed at 104. It almost has to be. The slaughter has been huge again today. I think that marketing number could be helpful. So I'm actually, for a change, looking forward to a report that might help us. But I say that, and then the USDA will surprise me. But I'm not a bit scared I'm anxious to see the report, frankly.
And not to poke the bear, but a report that comes out after the markets close.
What a novel idea. When we all have a chance to see the numbers at the same time and have a chance to think about it instead of the grain reports. Yeah, right.
I just had to poke the bear a little bit.
It's all good. I'm happy to make that sarcastic comment.
Thanks, Brad. Well, thanks for joining us this week.
Of course.
I always want to remind folks, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.